Hi there, and welcome to the Markets UK podcast with Nick Shepley. And this is a quick burst of politics, history, and finance for you. So, this week I really want to be talking about hyperinflation, printing money, and the lessons of 1923. So, last week, 80 years ago, Adolf Hitler was sworn in as the Chancellor of Germany, appointed by Vice President Paul von Hindenburg. On the evening of the 30th of January, the Nazis' own private army of street fighters, the Sturmabteilung, or the Brown Shirts, marched through the streets of Berlin and other cities carrying Nazi flags and burning torches, announcing that a new Germany had arisen. 90 years ago, last week, in 1923, an event occurred that would help pave the way for Hitler's rise to power. An epic crisis in the monetary system that led to an impoverished middle and lower class to cling to the Führer in the late 1920s and early 1930s. The German hyperinflation crisis has a lot to teach us about paper money, savings, panic, and democracy. But firstly, we need to explore its origins. It's interesting that even in 1920, when John Maynard Keynes wrote The Economic Consequences of the Peace, he was referencing the threat of inflation and referring not just to Germany but to all of Europe's powers who'd been profligate in their spending. He said, "The inflationism of the currency systems of Europe has proceeded to extraordinary lengths. The various belligerent governments, unable or too timid or too short-sighted to secure from loans or taxes the resources they required, have printed notes for the balance." Now, if that doesn't have frightening resonances with today, then I think we really need to be re-examining the current rounds of quantitative, or qualitative as I call it, easing. In short, the governments of Europe, locked into a war that they hadn't anticipated or estimated how long it would last for, had spent their gold reserves and bankrupted their empires with the fighting. And they had resorted to printing money to pay their war debts. Russian inflation, combined with food shortages in February 1917, led to widespread protests in Petrograd, which within 10 days led to the fall of the Romanov dynasty and its replacement with a provisional government. Germany had been equally foolish with her finances. She prepared for a relatively short war, assuming that Britain would not get involved, that France could be defeated quickly, and that Russia would mobilize slowly. Instead of facing one enemy at a time, she faced all three at once quite unexpectedly. This was her nightmare scenario, and it was a nightmare scenario of concerted action by three enemies on three fronts which ground her down. Whilst Germany's armies fought very effectively on all fronts, it was at home that the crisis was really felt, with shortages. A British naval blockade killed by 1919 nearly 1 million people through hunger and through shortages. The Kaiser's government, since early on in the war, had decided that raising taxes would be untenable, and raising loans became more and more difficult as both Britain and the USA dominated the world's financial markets. The only alternative was to print more money. By the end of the war, when Germany had been reduced to utter chaos and competing parties of the radical left and radical right were determined to overthrow the government, and in 1919 the mark had reduced from its gold standard virtual parity with the US dollar to being worth 25 cents, so it quartered in value. Within 2 years, the $1 could buy 75 marks, and by 1922 it could buy 400. This devaluation of the currency was useful during the war. The government could borrow vast sums by issuing bonds to the public, but by printing additional money at the same time, they were devaluing the investments that patriotic Germans had bought. By 1919, the government was effectively bankrupt, as it was repaying a debt that was consuming 1.25 times the total revenue of the nation, thus giving the government no choice but to continue printing money and hoping that some revision in the terms of Versailles would be possible. When the British and French examined the collapsing value of the mark, their immediate suspicion was that the Germans intended to wreck their own economy. in order to get out of paying reparations. They demanded in 1921 that reparations be paid in gold bullion and nothing else, sending a clear signal out to the world markets about how they rated the value of the mark. By 1923, following a number of defaults on payments to France and Belgium, both nations decided to extract payment in kind and invaded the Ruhr, Germany's industrial and mining heartland. They began to extract wealth in raw materials and manufactured goods from this vital region of Germany's economy, but in a bid to sabotage this, the new government ordered a general strike in the Ruhr. In order to continue feeding and clothing the families of workers, the Weimar government continued to print money, now without the most important and powerful actual wealth-generating sector of the economy to give paper money real worth. This is the point at which hyperinflation evolves from inflation. In January 1923, when the occupation of the Ruhr began, the dollar was worth 7,000 marks, and within 6 months, by July, it was worth 160,000. The real value of the dollar was largely unchanged. It was the value of the purchasing power of the mark that was collapsing. 1 month later, in November, the exchange rate between the US and Germany hit the watershed of 1 million marks, and by November the 1st it stood at 1.3 billion, reaching an all-time low of 4.2 trillion marks at the end of November. German Reichsbank printing presses could not keep up with the vast devaluation of the currency and the rapid increase in prices that occurred as shopkeepers desperately struggled to put prices up in order to keep marginally ahead of the plunging mark. In the short term, the problem was solved by the new Chancellor Gustav Stresemann, who called off the strike and got Germany back to work, and who negotiated the withdrawal of French and Belgian troops. He realised that cooperating with France and Belgium would be far more likely to yield results in the long term, and France and Belgium both realised that cooperating with Germany would be far more likely to yield results when it came to reparations in the long term. A new currency, the Rentenmark, was issued and vast amounts of marks were burned, but something darker and more toxic entered public discourse in Germany. One ordinary German expressed it succinctly. He said, "Of course all the little people who had small savings were wiped out, but the big factories and banking houses and multimillionaires didn't seem to be affected at all. They went right on piling up their millions. Those big holdings were protected somehow from loss, but the mass of people were completely broke, and we asked ourselves, how can this happen? How is it that the government can't control an inflation which wipes out the life savings of the mass of people, but the big capitalists can come through the whole thing unscathed? We who lived through it never got an answer to that meant anything. But after that, even those people who used to save didn't trust money anymore, or the government. We decided to have a hi-ho time whenever we had any spare money, which wasn't often." Having a hi-ho time would be Germany's experience for the rest of the decade, as she restabilised temporarily on the back of loans from the USA. But the experience of 1923 fatally crippled the faith of many small German savers in Weimar democracy, or the economic and financial institutions that supported it. The solutions to Weimar's financial crisis were also short-term: a reflation of the economy using loans, which ended abruptly in October 1929 with the advent of the Wall Street crash. During the chaos of 1923, Hitler had launched his only armed bid for power in Munich, and it had ended in farce, with 19 of his brown shirt comrades being gunned down by soldiers loyal to the Republic. Throughout the 1920s, as Germany danced, revelled and ignored tomorrow, Hitler was an irrelevance. The hedonistic times did not support his firebrand racial rhetoric. Hitler only became relevant to the vast majority of Germans during the 4 years of epic crisis after 1929. I don't believe that history repeats itself so neatly that the forthcoming currency crisis that is currently incubating will result in something akin to Nazism. That ideology was born of very specific historical circumstances. It is fair to say, however, that it is likely to result in something economically or socially fairly bad. Quite what, we shall have to wait and see. We do not have to simply be passive hostages to fate, however. We can prepare our own financial sandbags for the deluge to come. The easiest way to protect your wealth in a time of mass currency printing is to invest in real-world tangible assets that will retain their value no matter what, because they are inherently valuable in and of themselves. And if you'd like to explore that more, you can visit our site at www.markets-uk.com to investigate a number of real, solid investment opportunities that you can have confidence in. Anyway, this has been Nick Shapley with the Markets UK podcast, and I look forward to having this dialogue with you again on the next podcast. Thank you.